Okay, or online.
All right. Hi, everyone online. Yeah.
Matt, Barb might need to refinance.
Nice. I'll talk to her about that.
I just did.
Oh,
Well, I'm Matt Adams. I'm with Bell Bank Mortgage. Recently partnered now with Keller Williams here in the office in Hudson. Really excited to be here, actually. I've been in the area 19 years lending. I've lived in Hudson for years. Now I'm in Troy Township, just south of town. I actually have an office across the street behind Wisconsin Credit Union where I've been for the last 3 years. Share that with Rich O'Connor, the mayor here in town. As far as making the move over to Keller Williams, we were excited with the opportunity when it came up to have a chance to come in and actually interview for the position and be here, which is wonderful. Went well. I've worked with a few agents here in the office over the last several years. Good experience there. I've only been with Bell Bank for just over 3 years now, but it'll definitely be the last place that I will be. I'm going to stay here until my career goes into the twilight.
75, how old are you now?
42, so I got a little bit of time to go. Wife is a teacher here at the Hudson High School in special ed, and then my kids are a 13-year-old daughter and a 10-year-old son. If I didn't mention it, this is my 19th year in mortgages, so I've gone through a couple of the ups and downs. As far as Bell Bank and Bell Bank Mortgage, we've been around for quite a long time. We're the largest mortgage lender in Minnesota. We've got offices in 12 different states. We cover almost all of the United States. If you have customers that end up buying a second home in California, Arizona, or Florida, we can handle that as well. Products, some people want to really know that. We offer all of the products that are available out there, including USDA, WIDA in Wisconsin, Minnesota Housing in Minnesota. We've got niche products for certain situations. Our doctor program is one that gets used fairly often, doctor, dentist. Say you've got someone that's just coming out of school. They're just getting their first big, start in the industry. We can close 90 days before they start, as long as they have a signed contract. We're going to use their new income. We'll go 95% with no mortgage insurance on that particular property, on that loan, up to $1 million. And then if we go over $1 million, they're going to need 10% down. So just a kind of a nice little niche for dentists, orthodontists, and doctors. Myself, I tend to focus a lot more on the educating the buyer, making sure they understand where they're at, what they're doing, so they're comfortable throughout the process. Want to help them up front with what we're going to be doing so they know the expectations, because mortgage can be a little invasive. We tend to ask for a lot of personal information. People don't care for that. We're trying to limit that with some of our upgrades on technology. So now with application, when they do their electronic application, they can opt in to allow us to electronically try to verify assets, verify job, verify everything immediately, so we don't need the paperwork. But that's still a little bit in its infancy, so not all of those are going through. I didn't realize I was going to have the entire time, so I didn't prepare for a half-hour presentation. What are some of the things that you guys want to know about? Is there anything that you're really curious about when it comes to my background or Bell's background? I mean, Bell has been it was Bell Mortgage. If you heard of only Bell Mortgage, that was 1980 when Bell Mortgage opened up in Minnesota. Merged with the bank in 2007 to become Bell Bank and Bell Bank Mortgage, one entity. And ever since then, we're still a privately held bank. one family since 1967. And the goal of the bank is to expand to be the largest privately held bank in the country. We're currently at a little over $8 billion in assets, and we're about ninth in the nation for a privately held bank. So we've got a 20-year vision to slowly expand throughout the country. Generally happens with mortgage coming into a location first, and then a bank location develops from there. I'm the first loan officer in Wisconsin for Bell. When I opened the office here a few years ago, we've since opened an office over in Brookfield, mortgage office, and a mortgage office in Wauwatosa. And so we do all of our local underwriting in Golden Valley, Minnesota. We do have underwriters down in Arizona for Arizona and New Mexico for our offices that are down that way. But generally everything is hubbed and based for mortgage out of Golden Valley. The bank is based in Fargo. What's really nice about having the bank partnership is we do have portfolio products. You may have a customer that they have a great credit score, but something doesn't quite fit, or the property doesn't quite fit Fannie, Freddie, or Ginnie Mae guidelines. Well, we can go to the bank and say, this is a good customer, I've worked with this customer, or this is a good referral source partner that I've worked with for years, and this customer has just a house that doesn't quite meet the guidelines, or they have their credit score is terrific, but they've had a little blip in their income because of COVID-related issues. Their company took a little bit of a dive, their income looks bad, but they have this grant that they received that's on their balance sheet. Well, that makes sense. So we can go back to portfolio and say, their income's gonna be fine, it just doesn't report as income because of what type of, because it was a relief product. Something like that, we can go back and still do a 30-year fixed portfolio loan. The rate tends to be about an 1/8 higher than the current rates. So instead of being at 2.8, they're gonna be at 3%, 30-year fixed on a portfolio loan, even though they didn't meet Fannie or Freddie guidelines. We also service about 80% of our loans. So very few of them are gonna get sold off, and that includes VA, FHA, all of our government loans. We're also servicing those now. That's been a little bit of a change over the last few years. We used to sell off about half. We also, lost my train of thought there. Sorry, it's gonna go down a different road, but with the bank, we also developed a really strong construction loan program and rehab options for customers. They may be in a situation looking for a home and they're just not finding what they want, or they need to upgrade a home when they get in there, and we've got a couple different options there. We've got one if you're doing non-structural, you're just doing cosmetic, updating the kitchen, updating the bathroom. It's a one-time close if you can get all of that work done in 90 days. With that situation, you can go 40% over the current value of the home. So if you had a $200,000 home, you could go up to $280,000 total with the work that's going to go into it, and do 95% of that financed. So they need $14,000 into it to create the property that they really want, if they can do that quickly. Otherwise, we'd be looking at a construction loan, full rehab, or you can look at from ground up construction. So we have those. We have a one-time close with the ground up construction, or we have a two-time close in certain situations, depending on what they're doing. Either if you're under the $510,000 conforming loan limit at this point, 5% down is all that they'd be required to have. In Wisconsin, it's tough to compete with Associated on their construction loans. That's okay. Construction loans aren't always my favorite thing to do. With the partnership, I'm going to be in the office most of the time. I plan on being here 4 or 5 days a week, at least part of the time. I do have children, so I sneak out here and there. I do have other appointments that I go to. Post-COVID, I'm hopeful to start going back to all of my closings. Right now, title companies really haven't wanted extra people there, so I've been avoiding those. But I do try to make it to all of the closings if possible. My door's open almost all the time when I'm here. If I'm on a phone call or something, I might have to shut it for a little bit, but stop in and ask questions and go through scenarios. Happy to do that. If it's over the weekend, I'm available on my cell phone. I can get pre-approvals out pretty quickly, go over scenarios with customers. I do this, I know Brian's in the back of the room. I've worked with Brian for a while and kind of vouched for me with, I can be a quick answer. We can go over a 30,000 foot view of your customer really quickly over the phone. Do you know your credit score? Do you know your income? Where are your debts? And I can give you a quick answer that yes, it looks decent. It looks like they'll be able to do that. It's worth your time to go through that house. I can't give you a pre-approval until after I see their application, because I'm going to pull their credit and I'm going to run an automated approval before I give out an approval letter. We're going to know that unless that appraisal blows it up, this file's going through. That's kind of how we do our pre-approvals at Bell. But I can give you that quick answer and say, we're in a situation where that customer should meet all of the guidelines based on the information they provided me. I haven't seen their check yet. I haven't seen their credit yet, but they've seen it. This is what they're telling me. It should work for you. And then you can make a professional decision that yes, we'll go see that house based off of that. Or why don't you finish getting that full pre-approval if I say, they didn't know what their credit was based on income. Yeah, they meet guidelines, but I can't tell you if they can go. Just trying to be beneficial to make life easier for you. Pre-approvals come out electronically, and I can send them from my phone if needed. As far as tools that we have available, I have an electronic app that I like to share with customers. I share it with real estate agents. It has all of my information on it. It has rates on it. It has a rate calculator, mortgage calculator on there. You can set it for different programs. It gets shared with customers very easily. And when they are using it, I get notification that they used it to look at this, or they've used it to calculate payments 10 times in the last week. That's nice when you just have a customer that's kind of on I'm going to start looking in the spring, and all of a sudden here it's January and they're on my app 15 times. Well, I'll give them a call and say, are you ready to get back and work with, with Brad, your agent, because I see that you're looking at a bunch of different homes or you're calculating things out. Just kind of a nice additional tracking system that we have. I like that. I'm part of the Rate Plug program, if you're familiar with that. Happy to be registered with you, and then I can create different, different flyers if you'd like based off of that. We also have our whole entire marketing team in Golden Valley as well. I have my own marketing individual that I work with, so we can look at doing different types of advertising together. There's restrictions there in regards to how the costs are paid and everything, but we can design different things, put it together, whether it's a online ad or a video, or if we want to do paper of some sort of mailer. Those are all things that I've done in the past, and we can do pretty easily and get them designed quickly. Just trying to think if there's on your side. Yeah.
If it's Friday night, 8 o'clock, you got a buyer and they want to write an offer and they don't have a pre-approval letter, can we get a hold of you, and how competitive are your rates?
Okay, good question. It's Friday night, 8 o'clock, and you want to give me a call, I will answer if I'm available, and if I'm not, please leave a message or send me a text because I will respond as quickly as I can. Yes, I can get a pre-approval out. I do want to double check the file if I don't know it off the top of my head, or if it's a brand new customer, I'd like to talk to them before I issue anything. As far as rates go, competitive wise, we try and we tend to be right there at the best of anybody on all of our programs. Out here in Wisconsin, every once in a while, a credit union will be a little bit better, or on a straight conventional loan, Hiawatha might do a little bit better. And in that situation, we would ask the customer to just get a quote from them, and we'll generally match it or beat it, because we want to earn the business and we want to be the best there is. Sometimes there's little programs out there that we won't be able to compete with, like maybe there's just a niche. They have a 10-year arm at 2.5 with no points. And, our 10-year arm right now is higher than our 30-year fixed. So I would just say, if you want a 10-year arm, that's your best option. Because my personality is one that if there is a better option out there and they found it and that loan officer's treating them right, that's okay. You know, stay there. They did the right thing for you. They offered you the right program. They did what I would have done in the same situation. I'm not going to take you for $100, but you're always going to be working with me. It's going to be easy to reach me. And if it's one of your customers, you can check in on it very easily as well, whether you come in or send an email or send a text. I try to make sure if there's any issues, you're well aware of it. And as things come in, appraisals, underwriting, you get an update, just so you know where things are at. Any other questions? I can't see if anyone has any online, but do you guys have any questions, concerns? Yeah.
How do you work with investors? In fact, more specifically, even there used to be a program where you could buy an investment property and you get the loan on what the rents would be.
Mm-hmm.
You have something like that?
Yeah, so there's several different types of programs when you look at that. So as far as investors go, on conventional programs right now, they're going to be looking at 20% down payments. If they have landlord history, they'll be good across the board. But on conventional, they don't even need landlord history. So if this is their first purchase of an investment property, we can use 75% of the rents if there's signed lease agreements. If they're buying a home with no tenants in it at the time, we're not going to use potential rent to qualify. They would actually have to get a signed lease agreement and damage deposit to qualify using that rent. Now, obviously, they can get that, so the person's moving in a month after they purchase it, but we would have to document that lease and damage deposit. If they're looking at, like, for example, I have a customer right now that wants to buy a duplex to live in and lease out, but they want to qualify using the duplex, using the other side. But they also want to use their VA benefit. Well, we're not able to use the lease income for VA unless they have 6 months landlord history. So there's different requirements with different programs. And then you get limited on the number that they can finance. So if you have an investor with a lot of homes with mortgages on them, we're going to be limited to 10 that we can finance in a conventional situation. There's ways around that, working with our commercial team as well, and kind of moving things into portfolios if they want to, if you get into larger investors. Yeah. Most individuals don't end up with over 10 properties, but there's definitely some bigger investors that will have a large portfolio of properties. And so then I just become a small piece of their puzzle. And I don't have any issues helping them with that either. I did run the mortgage company down at First American Bank, it's now Hiawatha, now they got bought out, but I ran that before moving over to Bell. And I was also a commercial lender there at the same time. So I have a good understanding of how to kind of balance things if we need to move into a commercial situation, or if they're looking at, here's one of your investors that's been buying 2 and 3 and 4 unit properties, and now they're thinking of moving up into like an 8 or 10 or 12 unit apartment. It's an easy conversation for me to have with one of our commercial lenders and say, look, I already have all their information. This is the situation. They're just trying to move into a different type of property in their portfolio. And so we can definitely have that conversation. And again, I think it comes down to the customer being comfortable with who they're working with, whether that's the real estate agent, whether that's me. And it's not always going to be me. And that's okay. I try to explain things in a way that they're comfortable with. I try to educate them. And some people need a long education process, and some people have been around the block a few times and they just, let's do everything electronic and move on. Yeah.
What if their credit's bad? Can you help them?
Yes. So we do, we are not a subpar lender. We're not going to be out there doing 580 loans. We tend to 620 and up. So we need, and right now most things are 640 just because there's some restrictions with COVID. But with that bad credit situation, I have a conversation with them, and then we're going to look at the credit to find out why it's there. And in most situations, there's a few things that can be changed and we can get to where we need to get them qualified quickly. In other situations, I work with a couple different credit repair companies, and I would refer them over and say, take a few months, get yourself ready, and then let's keep going. I put them on an email drip program, and then a reminder so I can check with them every couple months and just say, where are you at? Did you actually follow any of the advice that was given to you? Do you really want to be a homeowner, or were you just kind of looking around? And that,
Does that cost money, the credit repair company?
so the first thing I'll do, like I have a customer right now that for this particular one is a VA loan, they missed their 640 cutoff. They were at 636 mid-score. I took a look at the credit. I sent it over. We have a program in Interior. It's what can we change to get them to qualify right now? For him, he had to pay off a $600 credit card and moved his score to 650. So I said, here you go, pay this off, give me this documentation. And I went back to the real estate agent and said, they are approved to move forward, but I need this documentation before I can give you the written pre-approval. And so they're out looking at homes right now, and I already got the documents back today. So they'll be fully approved by updating credit takes a few days, but they'll be fully approved probably by the end of the week. If it's a larger situation where we need to correct long-term things, the initial look from the companies that I work with, there's no cost. They'll do a soft pull on the credit. They'll take a look at where their credit sits right now. They'll walk them through kind of an initial consultation of what they expect that they can do and where that'll get them to. And then they would go over the costs associated with that. So there would definitely be some fees involved.
What's your average turnaround time right about now?
Yeah, so great question. So our average turnaround time on purchases is 30 days. We really focus on purchases. Yes, it's a refinance market. We're still doing 50-50. So our purchase transactions are about 50% of our total transactions. We focus on the purchases. We push our refinances and we tell them right at the beginning, you're going to be 60 to 75 days out, because we need to be able to turn our purchases for customers in a market like this that find a home, make an offer the same day.
That's even with like USDA, VA, all those guys that are taking longer to get back.
Yeah, so USDA,
They're pretty much done for the year.
so
I would
we,
suspect.
yeah, I have a USDA closing, set to close on the 20th, but we didn't get the appraisal back yet. And USDA is a week out after we're done. And so that one, if I don't have a full approval by tomorrow, we need to move.
Sure.
And so that's rare. And the only reason that happened is because the appraiser missed the appointment or couldn't make the initial appointment, and the appraisal's arriving a week later.
Mm-hmm.
So our timeline is really based on when can we get that appraisal back.
Sure.
So if you're in rural Wisconsin, I'm going to add a week. If you're in the Twin Cities, it's going to happen right away. And that's true for any program. Conventional, we don't see many delays. But when you get into VA, USDA, wheat is conventional, but every once in a while there's an issue there too. I have another USDA one that the appraiser forgot to look in the attic, and it's a requirement to review the attic. So now we got a 3-day delay. You know, it's not going to delay our closing, but it's going to make my closing team dislike me a little bit more. But that's just happens. And right now we're at record volumes, you know, and most of the industry is, and that just, it bogs things down, but we've ramped up for it. We've added staff where we needed to.
Being able to stay within 30 to 40 days is pretty good.
Yeah. And
The last two I did, I had a USD that closed last week, 2 weeks ago, and I got a VA this week. And they both the lenders were like 50 to 60 days minimum because of outside approvals.
well, and so we do actually do all of our underwriting fully, including USDA, but USDA still requires to review and stamp it.
Right.
VA, we don't need that. We don't have any outside. So everything is in-house. So as far as it being VA or being conventional, it's the same as we're concerned. It's really just getting the appraisal there.
Yeah.
We also, you know, we have our own appraisal department. And that allows us, if there's issues with appraisals, or if we need to do something ahead of time, I can reference one from a couple years ago with you, Brian, that it's just, we were doing a USDA on what we thought was a dirt floor home, right? Which most people don't want to do that. But before we put the offer in, I went to Frank, who's kind of the head of our appraisal department. He's an appraiser himself. And I went to Frank and said, here's the house, this is what we're doing, here's the situation, can we make this work? And he went through it all and he said, I don't see anything that's going to stop this from going USDA.
He dug it out. There was 2 feet of mud, but there
There was actually a floor in there, but the appraiser never saw it. But it went through, and I think that was Zach's listing.
Yes.
Yeah. And so it was just one of those tricky situations that let's check it ahead of time and make sure it works, because there's nobody listing their home that wants to get.
And it needed a septic.
Yeah, and that's true. We had to escrow for a septic too, which isn't easy to do with USDA. But we did, we got it done. So I mean, every situation is unique. Most of them aren't cookie cutter. I have the background and the knowledge to do that, and I have the bank that backs us if we need it. And if we don't, or we don't have the program, if I know somebody else that might have it, I'm going to let your borrower know that. I'm going to let you know that. Have your borrower check here. I work with a couple brokers here in town that get a couple things done that are just a little different. They have a bank statement program. I'm not going to offer that. Higher interest rate, but they have that for certain self-employed borrowers that if they can show that they have their income coming in for 12 months on their bank statements, they're going to qualify for more on that program than when I take a look at their tax returns. And so sometimes that's the right play. And so you make that move. Like I said, every once in a while, there'll be a situation that just doesn't work, and I'll suggest that they go talk to that person. And that's worked out for me because I've had it come back the other way too. You know, hey, I've got a customer that's buying something in California. Can you take care of it? I sure can. And we just go back down. I don't have much else. I mean, I want people to stop in, say hi. I'm going to send out an email to everybody, just kind of introducing myself. If life gets really busy, there's another lender here in town, Jess Perry, who just lives up the hill in Red Cedar Canyon. He wasn't able to come down today, but otherwise he would have introduced himself. He's going to stop in periodically, come in and be in the office as well, just so people know that he's there. But I will be here almost every day. I'm pretty easy to get a hold of. I tend to be pretty easy to get along with. My interests outside of work would be my family, hanging out with them, and then I play a lot of competitive volleyball. So I still do that quite often. I'm out in Eau Claire a lot, and I'm in the Twin Cities a lot. So if you have business that direction, I know a lot of people out that way as well. Anything else? Was the pizza good?
Delicious.
Did you guys get any?
Hurry and quick.
It's still some left, I'm pretty sure. But no, other than that, I'm excited to be here. Belle's excited to be here. Belle has had a couple other partnerships with Keller Williams throughout the Twin Cities, and they've gone well. And so this was kind of a natural progression. And we're excited as a team, as a company. Yeah, I'll be the face that's here all the time, but know that there's a lot more people behind me that are really supporting. All right. With that, I'll let you guys get back to work.
Thanks, Matt.
Thanks, man.